It's time for business, and Owen, we're going to start with a look at the markets. The Asian markets surging today with some soothing words from China on the Eurozone crisis.
Yeah, and some soothing moves as well from the Japanese government, which is, in the last 24 hours or so, putting around 11 trillion yen into the economy, has helped drive the Nikkei to 6 month highs, I should say. Once again, the Nikkei's finished the day's trading just shy of 2.5% in the green, as Claire says as well. The Chinese government has given some fairly positive indicators that it is willing to get back on board with the whole Eurozone crisis. Their central bank governor says we will continue to invest in European government bonds and will continue to get more involved in solving the European debt crisis. You might remember that the Chinese had said we don't really want to get involved in investing into this European bailout fund, but their thinking is that they will do it via the IMF. One way or another, though, they're saying we will stand by you, and that's hugely important for the Eurozone. China is one of the few countries with the kind of cash reserves that could come in and help countries like Greece and, of course, Portugal as well.
Moving on now to some important earnings out from BNP Paribas, taking another big hit as it gets rid of some Greek debt.
That's right, yeah. BNP's profits for the fourth quarter dropped around 51% down, 700 to 765 million euros. That's compared to just over 1.5 billion euros. Previously, BNP is reporting that it's written off losses of around 570 million euros on its Greek holdings. Remember, all the French banks, BNP, Crédit Agricole, Société Générale, are busy unwinding their positions on Greece. It's worth noting, though, that BNP says it is planning to pay a dividend of around €1.20 per share for 2011. It is a big drop, nearly 50% drop, but that's important because the other two big French banks, SocGen and Crédit Agricole, are not paying dividends for 2011. Just while we're talking all things Gallic as well, it's worth mentioning new figures out from the French government confirm that the French economy grew by 1.7% during 2011. That's just a fraction higher than the forecast, so outperforming just a little bit.
So looking now at the latest moves on Greece, we've had that cancelling of a meeting by EU finance ministers because they still don't think Greek MPs are meeting their austerity targets. There were several preconditions for that bailout to be released. Is it too late now then for this country?
Yeah, that's the big question. Of course, you remember these talks, and the reason that the clock's ticking on these talks is that Greece has around 14.5 billion euros of debts maturing on the 20th of March. So there isn't an awful lot of time to get all the paperwork done to get these agreements in place. The latest indicators coming out of Brussels while these discussions are ongoing is that they can set aside these bailout discussions and concentrate on a debt swap. Now, the idea behind that is to give the Greek government relief on around 200 billion euros of debt. They'll effectively halve those debts by issuing new bonds for old ones with a longer maturity, less interest. That gives the Greek government just a little bit more room to play with. The real question mark with this now, though, is that if they manage to halve these debts by that March deadline, what happens to the half? And the worry is that they will still default on potentially 7 billion euros of debts maturing in March. That could be enough to tip Greece into the void. So we're really not clear yet on exactly where and how much, or how much of this remaining debt will be written off, how much of it creditors are going to ask for. So still some way to go, excuse me, with the paperwork on that.
OK, now the financial situation of Greece might be stealing all the headlines, but there are growing concerns about Portugal's viability. It needed a bailout of nearly 80 billion euros last year. Now some analysts like Goldman Sachs think around 50 billion more is required. Catherine Viep has more.
Downgraded further into junk status. That's the word from ratings agency Moody's. As Portugal struggles to get its debt under control, economists say the downgrade could have negative consequences.
So the government needs to fulfill its responsibilities, its obligations, and for that the government asks for money from the public in the form of taxes and also in the form of debt. In a downgrade like that, makes it much more difficult for the government to finance itself.
While Spain and Italy have seen their borrowing costs drop, it remains a question mark as to whether Portugal will fare as well. The big concern is that austerity measures are slowing down growth. When Lisbon received a €78 billion bailout from the EU and IMF last May, the ratio of its debt to GDP was 107%. By next year, it's expected to reach 118%. This despite the fact the government has pushed through cuts in spending, wages, and pensions, as well as increasing taxes. These moves have left many in Portugal grumbling.
The government takes money away from pensioners, away from all of us, so that the debt is paid. At the end of the day, it's us who are paying the debt.
Portugal's economy shrank by 1.5% in 2011 and is expected to contract by 3% in 2012, making it more likely that Portugal will need to seek more funds from the IMF and the EU.
And those EU IMF inspectors arrive in Lisbon this Wednesday for their latest check. We'll, of course, keep an eye on what comes out of those discussions with the Portuguese government. For now, though, let's give you a few more of the day's business headlines. Apple is in active discussions about what to do with its growing multi-billion cash reserves. That's according to CEO Tim Cook. The iPad manufacturer has been under investor pressure to return nearly $100 billion to shareholders through a one-off dividend. Cook spoke as Apple faces a selling ban in China on its iPad in a new copyright dispute with a Chinese technology firm.
China has agreed to open up its lucrative vehicle insurance market to foreign competitors. The agreement was included in a number of bilateral trade pledges during Chinese Vice President Xi Jinping's visit to the US. The deal is expected to trigger a scramble for business among insurance providers as they seek to cash in on the world's biggest car market.
And global regulators have found evidence of collusion between firms accused of manipulating international lending rates. Bloomberg sources say investigators have emails from companies involved in setting the London interbank offered rate, known as the LIBOR. JP Morgan Chase, Deutsche Bank and HSBC Holdings are among a number of banks named in the global inquiry into illegal interest rate manipulation.
Next, cashing in on the Facebook effect. The US property market story in recent years has been best summed up in one word: foreclosure. Not so in Silicon Valley. Real estate prices are booming, fueled by the explosive growth of companies like Google and Facebook.
This house has a listing price of $1.8 million. But in Palo Alto, in the heart of Silicon Valley, this price tag is no barrier. Realtor Ken de Leon is expecting around 10 offers, most bidding at least $20,000 above the asking price.
Everywhere else you have foreclosures and declines. Here you have multiple offers, some homes going several $100,000 above list price, and many more buyers than you have sellers.
The tech boom is back in California, along with rising prices. The average house sold in Palo Alto goes for nearly $2 million. And real estate values are set to rise even more this year by at least 10%. The reason? Facebook, for one. Its initial public offering, announced earlier this month, could value the company at more than $100 billion. Many of the company's employees will become instant millionaires, half a dozen billionaires. But in an already overcrowded market, there just aren't enough houses to go around.
They're going to triple their head count. Those additional 5,000 or 6,000 people are going to want to buy into the desirable communities, and that's what's going to push prices up.
That means even more business for realtors like De Leon. At a recent viewing, more than 100 people turned up in just 3 hours. And that pace isn't likely to slow down soon, as long as tech companies continue to call Silicon Valley home.
$2 million for a house in Silicon Valley.
That'll be my dream
Right,
property one day. Yeah, when
one
I'm
day?
living next to Mark Zuckerberg, absolutely.
All right. Thanks very much, Owen, for that look at the business news. Do stay tuned to France 24. All the latest headlines coming up in just a few minutes. Thanks for watching. Don't go away.